All right, team. Don't normally do videos mid-day because we don't have the data all in yet for our particular day that we're in. We still have a few things to figure out, to sort out today, but overall, getting some news that can't really be ignored, needs to be disseminated immediately. It coincides with what I've been saying for quite some time now. Rates are going to go up, lock right away, be prepared for pullback in stocks. I might even pull that up. We had the first member of Congress who had to report last quarter, it was mid-month in March, that their spouse was shorting or buying lots of different derivatives that were short-oriented, betting against the market. That's the first member of Congress that we've got such a situation with. I do not think it will be the last. And so we've got to look at this and go, all right, well, what is going on? Okay, so this is mortgage bonds so far today. We're down 6 basis points, which isn't that bad. But yesterday was terrible. I had a video prepared to do yesterday. I just couldn't get to it. And that's the reason why I'm kind of jumping the gun today. I have a feeling the same thing's going to happen this afternoon. So not a great day yesterday. We lost 80-something basis points, broke below key support level, closed below there. Things were actually much worse earlier today. We got as low as here and since have climbed up, hence the green candle. Even though we're still lower today by 5 basis points, you can see we're fighting resistance now of our previous close. And it's just, mortgage bonds, this is the ugliest chart of all time. And so it is what it is. I wish there was a better way to play it short. I would have done it a long time ago, as I've mentioned on this channel. Well, let's take a look here. Let me get myself out the way. Actually, let's do a little CYA, Derrick Evans, VA Home Loan Specialist. NMLS 155010. Call, text me, email me if you want to buy or refi, and I will help you out. No lender fees, great rates, the whole shebang. This is what we've been waiting to hear, and we kind of knew this was lurking out there. How much of this is priced into the market? Maybe a lot of it is, because look at the market today. It's only down 5 basis points, Derrick. Okay. Maybe. Fed officials plan to shrink the balance sheet. What does that mean? That means they're going to sell. So shrink the balance sheet with sell. So the Fed officials plan to sell stuff from their balance sheet at the clip of $95 billion a month. Yikes. So they've also said, and this is from the same Fed minutes, strong indications that half a percentage point or 50 basis point interest rate increases are ahead. So not just the trickling 0.25% we've sort of been told was going to happen every couple months. Could be ratcheting things up a little bit more already. If you take a look here, the 10-year is already at 2.61%. Look at that. Just amazing how fast that has gone up. And we've seen oil peel back quite a bit here. Pretty much nailed that one. Boy, I tell you what, I got to give myself a round of applause on that one. Called the top at 130, shorted it, added more in at 113. The most it got back up to on the bounce was 115. Hello! Gold right around 19. Crypto taking a dinger today, 5% dinger today on Bitcoin. There's crazy stuff coming out on Bitcoin. We're not going to go there right now. We're looking at what's happening, which if you see what's happening, you go, oh, okay, hey, surging interest rates push mortgage demand down more than 40% from a year ago. So mortgage applications are down. Is that a big deal? It just means a lot less people are refinancing. That doesn't necessarily mean things happening with the market. I will tell you from personal experience, there are less people getting pre-approved right now than there has been in the past couple of years. But that's to be expected. 30-year fixed rates cross 5%. Okay, so the average is up over 5%. We'll see at the end of the day tomorrow. I actually think it's midday tomorrow. We'll get the number for what rates were as of last week, which I think is going to be the high 4s. And then next week, we're definitely going to see the average creep into the 5s. I think there's no question about that. The Fed has been coming out, and you've been hearing from different Fed governors saying things that are pretty hawkish. Patrick Harker, acutely concerned about inflation, sees deliberate rate hikes. This is the point where Fed officials go, wow, this is really, really bad. We need to tighten. That's part of the reason why you're seeing Bitcoin fall, because remember, Bitcoin is essentially like a pairing. It's a currency pairing with the US dollar. It's Bitcoins per US dollar, or US dollars per Bitcoin, right? And so if the dollar is going to be strengthened by extreme tightening from the Fed, then that hurts the pairing and the value of the pairing. So that's why you're seeing Bitcoin down today. Let's see here. Brainerd also stepped in. Balance sheet reduction soon. And, oh boy, why do you have to say that? Come on, guys. Really?
Check, please.
Just tell everyone to sell, why don't you? Just say it. If you're going to say something like that at a rapid pace, we're going to sell at a rapid pace, and then you see the official statement come out, 95 billion a month. Now they've got, multi-trillion ledger, so 95 billion a month doesn't really put a ding in what they have, but that doesn't make me feel any better about it. So also, Janet Yellen steps in, warns that the war in Ukraine will have enormous global economic impact. Enormous. She's right. This is what I've told you we've been watching very carefully here, because what's going on there is you've got Russia's supplies, and I put this in the last video. So much stuff. Fertilizer, power, so many different things come from Russia, and they haven't been jerks about it at this point. Realize something. Russia's still been delivering gas to Europe, even though Europe is paying in euros and then cutting them off, freezing their account that's in euros. So they haven't been getting paid, but they've still been delivering the gas. That's pretty interesting, isn't it? So anyway, enormous global economy. So just a lot of these things coming out today, not super good. Oh, I thought this was interesting. I'm putting this in the comments. House passes landmark marijuana legislation. We'll see if marijuana becomes legalized before Bitcoin. Actually, Bitcoin is already legal. It's just not legal tender. So it's all good. This article you got to read if you're curious about what's going on with Bitcoin and why it has such an insane opportunity that most people don't understand. But yeah, very, very interesting. Oh, this is going to be fun. A few weeks ago, you schooled me that the feds don't make mortgage rates. That's correct. So, Karen, I will school you again. So the feds do not make mortgage rates. They do not. They make what's called the overnight lending rate to banks. So that's what they're talking about increasing. So let's get this straight for everybody. The reason why this is important, the reason why I'm talking about this, shrink the balance sheet, is because the Fed is going to sell their mortgage bonds. Now, if you look at the mortgage bond chart and you zoom out a little bit, you can see we don't really need any more sellers in there now, do we? I think we've got enough sellers. What do you guys think? Ugh. I mean, that's not good. That's bad. Real bad. The last thing you need on a chart that looks like this is more sellers. And that's what they're going to do. They are going to sell. The way that the Fed affects mortgage rates is that they buy bond. What they've been doing is they've been buying bonds. And so they're buying bonds, and that's what makes rates go lower, right? When bond prices go higher, mortgage rates go lower. So they've been buying bonds, and they've been keeping those bonds on their balance sheet. And they're getting paid the interest on those bonds, just like any other investor would. However, when they decide to start selling those at a huge clip, remember, they were a big buyer. Now they're going to be a big seller. That's going to cause mortgage bond prices to go down further, which will increase rates further. Has nothing to do with the fact that they are hiking. Hiking just has to do with the overnight lending rate. The overnight lending rate will affect things like the 10-year, will affect things like your CD rates, your car loans, the amount that you get for your savings account. That's what that overnight lending rate should affect. But it does not affect mortgage rates. So, Karen, you got schooled twice and free both times. Now, let's see here. Here's the big question, and let's just go right into this because this is where everybody's at right now. What happens to the price of housing? Okay, this is going back to 2000. That's real estate values. Median sales price of houses sold in the United States, right here. Okay, this is the crash. We went from 257 on average to 208. Okay, pretty big dump, but if you really look at it, Only about 20% on average. Only 20% downside in the worst case possible scenario for real estate imaginable. 20% downside, and that's if you bought at the absolute peak and sold at the absolute bottom. 20% on average. That said, look at what happened last time we had a recession. Okay, that was COVID, very quick, and straight up with prices. So what does that mean? What should we expect from here? Well, there's no question at this point, with where mortgage rates are right now, that we are going to see it affect real estate. Okay, so everyone just accept that. This is what it is. There's no reason to panic.
Check, please.
There's no reason to be overly bullish.
All we want to do is pump you up.
So sick of all these videos. People are just permables for this or for that, for Bitcoin, for real estate, for Ethereum, whatever. Don't be that way. Look at the information, digest it, and see what makes sense. Now, typically, when you have a big run-up, which we've had since COVID, we have, two things are most likely the result of that. So I'm going to do my best to draw it out here. Okay, so we have if we redraw that graph, you go up here, and then this is the housing crash, and then this is where we are. You get to COVID, and then boom, it goes straight up. Okay, well, when you go up like that, there's a couple things that happen. Either you retrace to a certain level and then consolidate and kind of create, and consolidate just means create a new normal. We create a new normal for, hey, this is how much people agree, that prices should be. They should be in this range. Or you do it at the top end of the range. That can also happen. You could consolidate there where prices just kind of go back and forth a little bit here in this range. Very similar to where we are right now. It could be plus or minus 5%, let's say. Or we're going to see, potentially a 10 to 15% dip. We could see a dip. Now, in my estimation, this is the least likely of the scenarios, but it's possible. And if it does happen, since a lot of people want to talk about worst case scenarios right now, if you do see a 10 to 15% dip, I think there's going to be tremendous demand that steps in and steps up to the plate here. I think a lot of people will recognize the fact that, these higher interest rates are probably going to be pretty short-lived. I mean, yes, it may last a year and a half or something like that, but in the grand scheme of things, go back to the crash. Look at here. Look, how long did it take? So Q1 07 to Q1 09. So 2 years for us to go peak to trough in the crash. 2 years. And when you zoom out on, the real estate map here, it just looks like nothing. Just like a little pullback back to the trend line, and we're off. So that's 2 years. I don't think you're going to have that. I think you're going to have a lot of people who are buying houses today, a lot of people who are buying houses this month. They're going to refinance in, 3, maybe 4 years from now at the most. They're going to refinance to much lower rates and have lower payments than they do today. I think a lot of buyers are going to kind of realize that, see that, figure that out, get good advice on it. I'll tell you one thing. People working with me are getting tremendous advice. That's just me just taking an absolute victory lap, 100%, giving myself a pat on the back and all that stuff, because we have absolutely nailed it across the board and saved so many people so much money. It's incredible. And I think there's a lot of good people out there in this space who are giving good advice and guiding people appropriately. And as long as that continues to be the case, I think you'll see people understand what's going on here. Hey, this is a spike in interest rates caused by inflation. Inflation is bad for bonds. Bonds are what cause interest rates to be what they are. This is getting dealt with. It's going to take time. It could be a year. It could be 2. What happens after that? You'll see a normalization of interest rates as well. So which is the most likely scenario between these two? I think most likely we consolidate at this higher price range, and you start to just see less frenzy, less craziness, less waived appraisals, for example, less appraisal bridges maybe. You're still not going to probably see seller concessions much, if at all. You're probably not going to see a lot of requests for repairs. You're probably not going to see people buying under list a whole lot. But you're you're going to see like just a little back and forth. Like you're going to go, oh, the market's soft here. Oh, hey, my buyer just got right in. Like, hey, we came in, we were the first offer. Remember that when listing agents sometimes would take the first offer? Do you guys remember that? Is anyone in the chat old enough to remember that? You might start seeing that again. Hey, we just want to get this much. You come in with this much right now, right here. We'll shut this whole sucker down. It's yours. They used to say that all the time. It used to happen all the time. And, you know, maybe we'll start seeing that again. People go, you know what? We just want 680 for this place. If you guys could put in an offer at 680, we'll be done with this. And so there's a lot of things that have to happen before you can really make this move. You know, you either need more inventory, you need buyers to just completely fall off the face of the earth, or if sellers go to sleep here, if sellers are not getting good advice, if sellers still think it's a frenzy, if their agents aren't guiding them here as to what's really going on and what's happening with interest rates, then, you know, it's quite possible that you could see sellers make some mistakes. And if they end up chasing this market down, if a whole bunch of them do, then, you know, maybe that creates this correction space here, this 10 to 15% that we're talking about. That's possible. I think that's the possible pullback that we could get here. So we consolidate in or around current levels, or we pull back and then consolidate, aka create a new normal. I think those are the two scenarios that we're looking at between best case and worst case. And it could be somewhere in between, of course. Could be somewhere in there, who knows. But that's my guess. This is my opinion of what's likely to happen next. We do know one thing for sure. It takes time for these things to flush their way through. It's going to take weeks, months before we really see the impact of higher rates. And unfortunately, right now, rates are getting worse at such a fast pace. This is what I've been worried about, what I've been warning about, what we've been tracking for so long. This is my main concern, probably the concern, the only real concern with the real estate space right now is interest rates and the velocity, just the ferociousness, the increasing, the cascading velocity at which these bonds are going down. And the fact that not only is our backstop exiting, so our big buyer, our safety net, the Fed, not only are they saying, you know, we're not going to buy anymore, they're saying we are going to sell now. See you later. Thanks for cruising through. That's a problem. So in other words, this is going to get much worse. It has to. There's no way for this to survive. I don't know how bad or how quickly. No one knows that. If anyone's telling you that, they're wrong. We can make predictions, right? I said 6.5%. I'm thinking that might be a little low now, but I feel confident we're definitely going to get to that prediction by the end of the year for sure. We're going to see 6.5%. You're going to see that as an average rate. And hopefully it doesn't get too much worse. You know, we start getting to 7s, 8% interest rates. What will that do? Does that change the worst case scenario possibilities here? Do we have is there a bear market? You know, is a bear market possible at 20 to 25% before we can consolidate and find new space again? Is that possible? Yeah, it's possible. We need things to get worse than they are so far. I don't think it's possible if things stay right where we are right now. But it will become, the worse these rates get, the more downside possibility we have for real estate. And that's why we got to pay such close attention to this. Right now, must pull the trigger, must lock immediately. Do not wait 2 or 3 days to lock in. Whatever you do, do not do that. Make sure you get locked in ASAP. As soon as you get into contract, get locked in. If you're looking to do a refinance, go get locked in today. Immediately. If you want to get a quote, if you want to figure out, hey, what would the rate be for me today? What about my scenario? What about my purchase? What about my refinance? You know, all you got to do is submit your information. Do the submit your scenario case here. That's all it takes. Email, text me. I need the loan amount, purchase price, or home value if it's a refi. I need your credit score, and whether it's a condo or a detached home. Tell me those things. Shoot me the info. I will get it to you as soon as I can. What's up, Rhino? Yeah, exactly. Coulda, shoulda, woulda. There's going to be a lot of people who are, I can't tell you how many refinances. It's just wild. How many refinance scenarios where I said, hey, guys, we need to pull the trigger here. Rates are in the threes. You're going to look back and say, hey, that's amazing. I know 3.75 sounds like a lot right now. And look, that's right where we are. The average rate now is a percentage point higher than that. I've got people locked right now who are buying new homes. I've got people who are just in long-term escrows where SPRPs were involved that are locked in the low threes, high twos even. And at the time when we locked those 150-day locks, people were like, are you sure this even makes sense, like to take a rate this high? And look at where we are now. You're welcome. You're welcome. But we've got to keep that same hat on, because again, today it looks like, 5%. That's so annoying. Why is it so high? We're going to look back on that 30, 60 days from now and go, oh gosh, I wish I could just pull the trigger on 5% again. Can you just give me that just one more time? Can I get that? Can we just get a pump real quick? One more time, 5%. Good luck to us all. Okay, I'm going to get back to work, guys. Y'all have a great day. What's up, Skip? Shout out from Albuquerque. Yo, my man. Good to hear from you. That's going to be it for now. Listen, call me directly if you need help on this stuff. Text me, email me. Don't let yourself, don't let your friends, don't let your family, don't let your clients be out there without the information. I know most people, because this stuff is in the news, most people are aware of rates going up, which is very, very good. That helps us a lot. That makes me feel confident about what I'm telling you here, because this isn't a secret that's getting dropped on the market. Oh, hey, by the way, rates went up. No, it is happening to some people. It is happening to some people. And I know some people look at me out of the side of their eyes, some permeable realtors, some lenders who are like, dude, shut up. This is such bad news. Why would you say this? This isn't good marketing. I don't give a shit if it's good marketing or not. If it's the truth, and you don't think people deserve to know, get out of my mix. Get out. Because that's not what we're doing here. So we're going to bring the truth. All we should be doing is bringing the truth, bringing information, letting people make their own decisions. Will I guide people? Will I drag them kicking and screaming sometimes in the direction that I know is correct? Yes, I will. But we should not be hiding anything. Oh, don't say rates are up. That'll discourage someone from doing an application. So you think it's right for me to take all their personal financial information, pull their credit report, and then tell them? What the hell's the matter with you? That's not how any of this should work. So yes, we're going to continue to talk about it. Yes, we're going to continue to bring the truth regardless of what happens. And yes, the people who pay attention to the videos and the people who are dialed in will be way, way better off. Damn! I know. I need to calm down. But you got to be feeling, I'm in one of these moves.
Playoffs? Don't talk about it. Playoffs? You kidding me? Playoffs? I just hope we can win a game.
Oh, we're going to win all right. It's just a matter of how much and how soon. Stay tuned, and I got you. Talk soon, guys.